Hi everyone. Today let's talk about why the markets are super overvalued, but it was fun while it lasted. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Goldman came out and said the S&P historic run is over, but it was very fun while it lasted. We've been going straight up for a while. And they say high market concentration tends to lead towards lower long-term returns, because even the superstar firms cannot continue to maintain that extreme growth in margins indefinitely, and then you start to see those bigger pullbacks. This is what we've been saying for a while. Can those biggest stocks continue to hold up markets? The medium to long-term answer is generally no. In the short term, it can happen. And really what they're saying here is if you've been pulling in that 13% return year after year, just buying the S&Ps, it's probably time to start rethinking that. The gravy train is getting slower. The US stock index is generally returning 3% annually over the next decade, so we'll see if that comes to fruition. Obviously, that's a very long-term perspective, but he says here, I largely agree, and I've been banging this drum for a while. It's always hard to say that because market timing is always a challenge, and I've been saying it on here for a while. I do think we're in a bubble, but bubbles can go on for years, and they can continue to go higher for a very long time. Trade the market that you have, trade the price action that you have, but in the back of my mind, I'm always thinking about how those medium to long-term charts are probably going to be bearish from here. Again, trade the market you have, but market concentration, not a great indicator. When we are extremely concentrated, usually that does not go well, and that's what they're saying here. Bigger concentration, lower returns, where if you have those broader rallies, then you tend to have bigger growth. And really, even if you do well in the short term, they're saying that you're experiencing higher risk with lower reward. 3 to 7% returns is not super great relative to where the S&Ps has been. And you can see those 10-year returns here. When the market is super concentrated, you can see S&P market concentration. The more concentrated you are, the more likely you are to see those lower returns. Occasionally, you can see those outsized returns. Gray observations equal recession, so you can kind of see those bear market rallies. But usually, the less concentrated, the higher those returns, generally sloping down in a way. So what should you be aware of? Returns over the next decade could fall, could be a lost decade. We've talked about it on the channel before. Is it going to be a lost decade? And how do you invest in those kind of markets? High valuations give markets more limited upside. Lower interest rates could help, at least in the short term, but there is zero room for slip-ups. We've been trying to maintain those higher interest rates and a soft landing scenario, which so far seems possible, but we have not really seen that resumption in growth that we need to see to allow markets to continue to go higher. Secondly, they say here markets have benefited from globalization, companies being able to spread their product across the world and achieve growth that way. But now that's starting to be a little bit of a hamstring. There are still some buybacks and time-limited tax cuts that are allowing for fiscal stimulus, but it has been tougher to achieve that growth, even with the globalization of markets. And then looking at market cap, you can see where we're at right now. Market cap very, very high. As a percentage, we're in that 38 number here. Very, very high concentration, and generally that leads to lower markets to come. I've been saying it for a while, like I said. Diversification, you can trade your money the way that I do here, but keep in mind, buying for the long term, make sure your long term is greater than 10 years from now. Otherwise, we are likely to see cheaper prices at some point in the future, in my opinion. Looking at fear and greed, we did finish the week at a 49, down from a 60 a week ago. You can see this has been a pretty substantial drop. We're into that neutral range. I would expect this to go a little bit lower, somewhere into that 30, 38, 40 range, somewhere in here makes sense to me. If we get into extreme fear, obviously that's where you start to put in some longer term buys, but for now we're in neutral, expecting a little bit more selling, and you can see fear pretty much across the board. No extreme fear yet. Neutral on the volatility, spiking up and then holding on the Friday. Safe haven demand in greed, junk bond demand, still extreme greed. So not everything has broken down yet, and I do think there's more selling to come. Moving over to the AAII survey, the bears did step up a little bit, just 1%. The bulls actually stepped up a little bit, neutral getting squeezed. Interesting to see that. Not super common. I would have expected the bulls to kind of get squeezed down a little bit more, maybe step into the 35 range, but the bulls are still hanging in there pretty good. I'm expecting this to continue to go a little bit lower here over the next week or two at least, and then we'll see what happens after that. Once these bears start to get into that 37 to 40 range, you can see 1 year high is a 37. Once we get closer to that, that would be a bigger indicator of a bottoming formation in my opinion. But for now, we're kind of in that normalized range, historical averages, pretty much in line with that. Moving over to seasonality, this is supposed to be a relatively bullish, sideways to bullish type period for this week. I don't know if we're going to get that. Markets do look pretty bearish, but then once this week is over, it is quite bearish up until the 20th, 21st. During that election year, there's lots of volatility. We have election day coming up. Start to get some results out of that. You can see NASDAQ typically falls pretty substantially during that period. So we'll see if that comes to fruition. Once we bottom out in that kind of third week, Thanksgiving time period, that's when you start to see those more aggressive rallies into the end of the year. A little bit less volatility, a little bit less risk associated with elections and all of that data. So we'll see how that plays out. Right now, neutral to bearish seasonally. Moving over to the economic calendar, this is a relatively bullish period, at least from a daily basis. You can see up 15, down 6 for the Monday. And then looking at Wednesday, up 17, down 4. Pretty good number there. NASDAQ 2% gain on average. Remember, if it wasn't for the election year, this would be a super bullish period, but election years do give a little bit more uncertainty. And then you have the FOMC meeting this week as well. So lots of data with the election, FOMC, some services data, and then, of course, Michigan data this week as well. So lots of data there. And then for the Monday, first trading day of expiration, the bond market is going to be closed, and that is a bearish day, down 13 of the last 20. So just something else to consider there. Moving over to earnings, there is still some earnings out there. We got Berkshire, Palantir, that's been an interesting one here recently, Fox Corp, Wynn Resorts. For the Tuesday, Marathon Petroleum, Young Brands, Coca-Cola Europe, Global Foundries, definitely interesting on the semiconductor space, Qualcomm, ARM, more semis there. CVS, they've been a dumpster fire here recently. Marathon Oil, Super Micro, that's going to be interesting to see what they say after the dumpster fire they had with their accounting firm walking off and they tumbled a lot. Match Group, always volatile. And then for the Thursday, you got Duke Energy, Motorola still hanging in there as a company. Hershey, Halliburton, interesting oil company there. And then for the Friday, pretty much nothing on the board. So most of the major earnings is done. Still a few of them out there. Moving over to the economic calendar, 3-year note auction here for Monday. ISM Global Manufacturing PMI, non-manufacturing employment, non-manufacturing PMI, 10-year note auction, as well as Q4 Atlanta Fed GDP. For the Wednesday, pretty much nothing. Don't forget election day coming up as well. And then for the Thursday, you do have the FOMC, the press conference, Fed balance sheet, initial jobless claims. That's kind of calmed down here recently. And then Michigan inflation data, Michigan consumer sentiment. Moving over to the Fed futures, just take a look at the probabilities. Markets are looking at one cut for this meeting, just 25 basis points. Very, very high percentage, so we're probably going to get that cut. And then looking at the December meeting, another cut is the highest probability at 83%. So markets are saying we're going to get 3 cuts in a row with the 50 basis points and then the 225 basis points. I think that's a little bit more than what the Fed said they were going to do. I thought they said they were going to cut 0.75%. And if they did follow through with all of these, that would bring us 1% lower for the year. And then as we start to get out to January, that's where there's a little bit more uncertainty. Do they continue to cut here, or do they have a pause meeting out in January? Right now, markets think we're going to get cuts through the end of the year at consecutive meetings, which this is part of why I've been saying the bond market is having a time right now. The bonds have been selling off super aggressive. Yields have been rocketing higher, despite the fact that the Fed keeps saying they are going to cut rates over the next couple meetings. So we'll see how that plays out. I would expect bonds to turn up as we get these cuts coming in officially. Moving over to Max Payne zoomed out chart, you can see 430 and 480 way out of the money puts, tons of them in the market. At the money, we are basically stuck at 580, tons of puts and calls at 580. Interesting to see that put call ratio still quite high at 3.4. Total options not a ton in the market at 600,000 for this week. Pretty interesting, surprisingly actually, that there's not a little bit more going into the FOMC plus election week. Thought there might be a little bit more in there, but there's not really. And then looking at Max Payne by price, you can see 573, 575, and then out for that Friday, 580. So it's a little bit of a bounce potentially into the Friday. Supposed to be relatively bullish this week based on this data. So kind of mixed. Seasonality says a little bit bearish. And then we have Max Payne saying relatively flat, slightly bullish. And this has been holding up quite well. But then once we get into the December, January time period, tons and tons of negative options in the market, much, much lower prices from here. So We'll see if that holds true. Right now we're okay, supposedly through the 13th. Moving over to the SPX here on the monthly chart, you can see we did find resistance still at this previous trend area, marked this previous top in January, marking the top again here in September, October. We did overthrow it slightly here, zooming in, you can see we did overthrow it just a little bit to this upper trend line and then ended up finishing bearish on the week, 0.99, basically 1% down. And then interestingly, momentum stepping to bearish on the monthly chart. That is a big indicator. So we're now in bearish conditions, watching that MACD start to roll to the downside. Eventually that will follow through, in my opinion. You can see here 1 month down, follow through, step down, follow through, step down. We had 3 months of bearishness in a row before we started to see some kind of rally out of it. Is it going to be a short-term kind of down move like that with only 3 months? Or is it something more key like this where you come off of a major resistance, which is where we are right now? So doesn't look super great on the monthly chart. And then looking at it on that weekly, you can see we're hitting these trend levels almost in line perfectly here. So up move, hit the trend, down move, hit the trend, up move, retested, continuation lower, down 1.37 on the week. Hitting this trend here, that's your current support at 57.10 or so. Momentum stepping to bearish, RSI stepping to bearish. Would expect this area to break, looking for a retest of the 21 EMA at least, which is at 55.94. That's down here. You can see these previous down moves, hit the 21, hit the 21s. So expecting a touch of that at least before we see continuation higher, in my opinion. We're just finding a little bit of support in here. And also this looks very, very similar to this move here in April. Step down, slight acceleration. And then that third week was very big, 3% down. So if we do get that move here, that would be in line with the same style of move. And this price action looks nearly identical. Big up candle, slight up candle, slight down, bigger down, slight up candle, slight up, down, bigger down. So this would be the step where you get that bigger down candle to the 21 EMA. And if we did get the follow through there, that would bring you about 2.5, 2 1/3, somewhere in there, percent lower. So overall, this doesn't look super great in my opinion. And then looking at the daily chart here on the SPY, just to give you some levels here, you can see rising wedge, breakout, breakdown, sell off. Now we're looking at the 55 EMA down at 566.97. My support is 565.16 if this next level breaks below the 55. And that's really what I would be looking for here. You can see this rally up, higher low setup here. That's the key level. That's where I think we're going. But you do have to wait for 569.90 to break before we get that continuation lower. Momentum bearish, RSI bearish. RSI is kind of showing you maybe we're just a smidgen extended off the SMA here. We get a little bit of a rally or sideways consolidation while this SMA trends down. And then we get that continuation, kind of like this, where you get the big move down, consolidation, SMA catches up, and then you get that bigger sell here. So just so you can see that a little bit clearer, big move down, retest, continuation down. Maybe that's the kind of move we get here, but seems less likely in this case, just my opinion. Moving over to the Tasty charts here on the monthly, you can see we are still very, very extended. Right at that upper ATR band is 565.08. It's actually good to come back and look at this. I haven't looked at it in a while, and you can see we have been very, very extended. Really, since June, we've been very extended. But now we got a sell candle. My guess is this is going to pull back at least to the 8 EMA. That's at 549.54. Remember, if you're trying to make trades based on the monthly chart, you have to be very, very patient. This could take the whole month to get there, so timing-wise, it's a little bit more challenging, but understand that's kind of the underlying thesis here. Down candle, we've already had another down candle, expecting this to continue lower to that 8 EMA. Otherwise, weekly, hit that second ATR band, pulling back, broke the 8 here, so your next support is the 21. That's at 557.85. Could get there within the week. It's hard to say, really. Momentum on the MACD, not super great. Again, still bullish conditions here on the weekly. I still think this is going to go lower in the short term. Looks very, very much like this setup here, and kind of similar to this one as well. Bigger moves down, and then the ATR trailing stops all the way down at 540, so there's plenty of room to the downside for this to fall. And then looking at that daily chart for the short time frame, that near-term target, if we did break the 55 EMA here, that's at 567.93, pretty much in line with what we saw in the previous charts, and then that lowest ATR band sitting at 562.47. That's still a pretty substantial down move from here. That's about $9 lower or so. I think there's more in it. Momentum still bearish, and you can see here on the daily chart we are in bearish conditions, something that we haven't seen since middle of September, which was relatively short-lived. Now we are back into bearish conditions, and I think there's a little bit more to this one. Moving over to the NDX here on the monthly chart, you can see we were down 0.85 for the month for the NASDAQ, and you can see this momentum continuing to roll. It's taking its sweet time. We're still in overbought conditions on the RSI, and that's one flat candle. So far, another flat candle. I would expect resistance. We might throw another wick to the upside here based on the monthly, but realistically, I think this is going to go in the direction of the SPY. SPY is the primary market, and the NASDAQ usually follows, just with a little bit more movement, a little bit more volatility in the same direction. So right now, flat candle, next flat candle on the monthly chart. And then looking at that weekly close, down 1.5%, momentum stepping to bearish, RSI right there at the SMA. If it breaks through here, that's going to be a big move. I think this is going to go down quite a bit. And you got the 21 EMA as support at 19,658. And I wanted to look here just at the NDQ. I do have a slightly different chart here. The trend support right now for next week, 19,811, somewhere in there. So a little bit more downside, again, 21 EMA in that same zone. But looking at that NASDAQ daily chart, you can see the huge down day we had, 2.5%. That is a change of structure, big lower low. Even if we did get slight rallies up to that 492 area, which it did try to do on the Friday session, but then it did sell off from there. Ended up just at my level, 486.84. Once this level breaks, I think we're headed to that 55 EMA, which is still at 481.59. Moving over to the Tasty charts here for the Qs on the monthly, you have that 8 EMA as support. Right now that is at 468.59, so critical level there. I would expect that to break and then head closer to that 21 EMA, similar to this back in December, January timeframe. You get the break of the 9, and then you get pretty consistent down movement for the next couple months. We'll see if that comes to fruition. You can see here 9 was critical. I think we're going to get there, and then we'll see what happens. So far, we've tested it a couple times over the last couple of months, and so far it's held up okay. And then looking at that weekly chart, big down move right at the 8. We didn't get the break here on the weekly. That's at 486.74. I do think that's going to break. I do think we're going to get to the 21, which is at 478.54. Right now, everything looks a little bit bearish. I think we're going to head lower. I think we're going to retest that ATR trailing stop just like we did back here in July. And right now, that's at 443.67. That's pretty substantial down move. It's about 10% lower from current price. We're sitting at 487. The HR trailing stops in the 443 area. Should be about $44 lower, so we'll see if it can get there. It will take a couple of weeks. I don't think it's going to happen all in 1 week, but I do think that there is definitely some downside to come here. And then looking at that daily chart, we are still in bullish conditions. The SPY did flip. The SPY flipped to bearish conditions. We haven't seen that for a while, just like we talked about, but we are here still in bullish. ATR trailing stop on the Qs is at 478.75. So right now, as long as that holds in here, we could see another slight continuation up. But you can see these previous peaks. They've been fading in momentum. High, very slightly higher high, very slightly higher high. Didn't hit that second ATR trailing stop. The momentum is fading. And now you have a low, lower low, lower low. Any kind of rallies here, I would expect to see selling, heading closer to that lowest ATR band, which again is in that 472.97 area. Definitely selling indicators across the board. Does that mean we're going to go straight down? Probably not, but everything technically says that we should go a little bit lower over the next short to medium term. Moving over to the Russell here on the monthly, also a down month for them, 1.42%. You can see right now up about a half, but momentum fading. So this is starting to look quite a bit weaker on the medium to long-term time frames. We've had this kind of consolidation, throwing big wicks to the downside, continuing to find trend support here. We'll see if we get another test of that. It seems likely that we will. We got one back here during that September month, and now if we do get another pullback here, that would be 207.48. Momentum says it could happen. RSI says we might find some support, so still mixed signals. Doesn't look nearly as good as some of these other up candles here. Similarly here on the weekly chart, it hung in there, stayed just barely flat on the week. We'll see if it can hold up in here, but momentum stepping to bearish, RSI stepping to bearish. If this breaks down, I think we're going to push right down here to that same 207 area. This is starting to look a lot worse after that big down week, 21 October, holding flat at support. Could hold. We've seen it hold here before and then get a continuation up, but The highs are not really that much higher, and the lows are starting to be pretty flat, if not starting to see another continuation lower here. And then looking at that daily chart, big down day, slight consolidation. Once this level here breaks, I think we're going to go much, much lower. In terms of levels, 218.13 is the support right in here. If this breaks, 214.79. And then that 200 SMA sitting right in that 207 area, 207.80, my level 208.22, fits in line with just about all of those other indicators as the area where we're going to dip. You can see that's where we came to back here September. I think that's probably where this is going to end up. And then maybe we see a rally out of it after that. But for now, seems like we're going to see a little bit more selling. And you could actually argue high, lower high, sell, looking for that lower low. And I do think it will come. And then looking at the Russell here on those Tasty charts, you can see the ATR trailing stop back here was at 223.27. That continues to be key resistance. We did technically close above it in July, but then since then, we have not been able to close back above that level. Again, this looks like a key area of resistance on the monthly chart. Looks like we're going to sell. Like I said, technically bullish conditions, but it just does not look as good as it did the last couple of weeks. And then looking at that weekly chart, you can see 2 down in a row right at that 8 EMA. Looks like we're going to push to the 21, 214.10. If that area breaks, we're probably going to start to fall at least to that 55 EMA, which is at 205.32, which is quite a bit lower. And then ATR trailing stop 197.07. We'll see if that level becomes relevant. We haven't been in bearish conditions for a while here on the weekly. And then looking at the daily, we're still in bullish conditions, still holding that 55 EMA, but the trailing stop is really tight here, 215.60, just about $3 higher than current. And if that breaks, I do think we're going to start to see that change in structure. Momentum bearish. We haven't seen really any volume for a while. The big volume was here. We round tripped that move, and then we've marched higher steadily. And again, you can see very slightly higher highs. You could argue lower high here, waiting to see if we get that flush out. And then starting to flow through these a little bit faster here with the Dow. You can see big down month, 1.25. Wick rejection from the level, 426, which was the high of September. Touched that level, overthrew it, sold off. Now we're expecting continuation at least to that 8 EMA down at 402.91. Monthly charts are starting to show more bearishness. You can see that step to bearish for October, continuation so far here for November. Looking at the weekly chart, down week, continuation lower just slightly, holding support for 1834. Realistically expecting this to continue to that 21 down at 407.83. And then looking at the daily chart, this is a downtrend, 9 below the 21, below VWAP. 55 is your support, 417.99 right at my level, 418.38. Momentum step to bullish here on the daily. I don't think that's going to last. I think this is going to continue here. This step towards bearish looks significantly different here. You can see we tested support here. 21 held up, 9 crossed just barely, but now you can see 9 well below the 21, well below VWAP. The only hope here is the 55, otherwise I think we're headed down to the 144. So not quite broken yet, but I do think it is going to come. Moving over to the equal weights, terrible weeks here, 2 in a row, 2% and nearly 1%. Momentum, big steps to bearish. RSI, big steps to bearish. VWAP is your next support at 174.68. Current price wins 76.40, but realistically I think this is going to the 21 as well. That's at 170.99. My level there, 171.51. So somewhere in here makes sense to me. 172.14 could be another area. See how that plays. I do think this is going to step down. I do think we're going to get a third week continuation similar to this. Big down week, third week, 21 EMA. So overall, still right in line with expectations. Let's go ahead and extend that out slightly here. Pretty much in line with the 21. Marks this bottom here. You could adjust it maybe slightly here. It's kind of hard to say, but I think the touch here makes sense, brings you right in line with those zones here. So overall, equal weights looking quite bearish. Moving over to SPY, Russell, NASDAQ, SPY. The Russell did outperform a little bit. NASDAQ, SPY ended up underperforming. Momentum stepping back to bearish. We'll see if this holds up. It's right at the RSI, trying to swing up here. So we'll see if that continues. If it breaks here, Russell outperformance makes sense. And then NASDAQ also underperformed. So the Russell actually held up okay, interesting. But NASDAQ hitting key resistance and then selling. Similarly here, SPY, Russell, I think this is going to sell. Moving over to the SPY divided by the M2 money supply, a big step down here as well, 1.37%, a little bit bigger than the regular SPY for the week. You can see we're back below 27.25. The key level is broken. We tested it 2 weeks ago. We broke it here this week. Current support 27.01. We're just barely above that 9 EMA. 21 there at 26.55. Realistically, this is probably going to go to the next level, which is currently sitting at 25.91. We'll see if that zone ends up holding. And you can see moves just like this where you break out, retest, break down, push right to that next level before you find some kind of support. And that is the kind of move I'm looking for here. This level is broken. I think we're at least headed to that 25.91 area. Moving over to the Mag 7, big down week here as well at 2.15% down. Hit the key levels, hit the all-time high, and then sold. Overall, Amazon did well. Google did well. Everyone else did not do so well. Obviously, we didn't get NVIDIA, but Meta, Apple, Microsoft definitely dragging down this index, if you want to call it that. Current support, 273.41, 9 EMA in there at 275. We'll see if this is a breakout rejection consolidation breakdown. That seems like the most likely scenario. Doesn't mean it's going to follow through straight to the downside, but if it does, 21 EMA, 269.10, momentum stepping to bearish, RSI right at the SMA. If it's going to hold up, needs to do it generally here. That's why I think we might see a little bit of consolidation before this sells, but eventually it will go. Once these levels start to break down, we'll see a bigger pullback similar to this, where you get 4 weeks in a row down move, big pullback to that 230 level, which was really substantial. That set an all-time high at 290.65, pulled back to 230.52. Big pullback before we start to see this rally back up. Now you have a clear double top, waiting to see this break down some more, in my opinion. Moving over to Apple and Microsoft, trying to give this a little bit of context here. Apple's been on a run. The medium term is still bullish here, but look at that big down candle, 3.67%. Markets did not like that move that we got on earnings. We're below the 21 EMA, current price 222.91, 21 EMA at 223.37. So we've broken all the levels here on that weekly chart. We haven't seen that in a long time. We've been consolidating here for a while. Momentum bearish, RSI bearish, volume coming in. Everything says that this should sell some more. And then similarly here on Microsoft, big down week there, 4.15%. Look at that volume, huge volume, nearly 200 million shares traded, which is huge for Microsoft, more than double the previous day. 55 EMA is your current support at 406.54. We broke all of my levels and my key level here, which was 413.36. Now I'm expecting this to push down to that 394.22 level. Realistically, I think this could push to the trend somewhere in that, either this week at 387 or the following week 385, somewhere in there. Momentum bearish, RSI bearish. These look awful, and these are some of the biggest stocks starting to break to the downside, and they are going to move markets in that direction, in my opinion. Moving over to Tesla and NVIDIA. Tesla down 7.5%. Had a huge week the week before, 22% up. Gave about half of that back, 7.5%. 200 SMA sitting there at 236.55. I would expect this to hold a higher low. Tesla is kind of one of the better places to be, at least in the short term. Still had a terrible week, but I do think it's going to hold up. They put out super good guidance. Markets loved it. Huge up candle. Big volume. I would expect buyers to come in eventually. And then NVIDIA down 4.34%. They didn't have earnings, but this was sympathy based on everything else we were seeing in markets. Step down on momentum, step down on RSI. Probably going to see this pull back here to the 9 EMA. And this is a critical double top now. So you can see the high back from the 17 June week. That was your previous all-time high. We did overthrow it. Did close above it briefly, and now we are well back below it here at 135.40. Now I think we're going to head back into this kind of consolidation of EMAs and SMAs somewhere between 121.50 and that 125 area. My level 124.69. First step to bearish, I would expect some follow through. We've seen it before. Big push up, closed well below the previous candle. Next was a gap down and fall, which ended up being about 13% down. So I don't know if it's going to be that dramatic, but it seems like NVIDIA is getting ready to sell here. The other thing worth mentioning is that NVIDIA did get put into the Dow. Maybe they see a little bit of enthusiasm around that move, but for now, technically it looks bearish. Moving over to Amazon and Google, these were the top performers for the week, especially for the Mag 7. 5.38% up for Amazon, hitting the all-time high level at 255 cents. Similarly, up Google, 3.39%. Threw a huge wick and then gave a lot of that back. The high of the week was all the way up at 183.79, and then we ended up finishing at 172.60. So wide-ranging week, still above the level. I think this could go a little bit more and then retest 179. We'll see if that starts to come to fruition next week. But the problem here is that markets are likely to go lower. So even if these are showing strength in the short term, the up moves could be relatively muted because they're going to be a little bit of a victim of markets as markets continue to sell, in my opinion. So be careful on your bullish trades because they can get drugged down by markets if the market is selling, even if your stock is still strong. Moving over to staples and discretionary. Staples breaking down again, 1.12% right to the level 79.90. Came up a little bit short, 79.96, so missed it by about 6 cents. But momentum bearish, RSI bearish. It is worth noting here, this kind of looks like a bull flag setup. Big rally up, flag type move, hitting this low here. If we rally up, double bottom, come off this lower band here, which is where we are right now, then that could kind of give you a setup back to here maybe. So we'll see if that plays out. Right now, staples doesn't look great, but it could. And then discretionaries, finding key resistance here at these relative highs. We've seen it a couple of times now, and we ended up closing back below $200.53. So that now looks like a consolidation, lower high setting up here. Momentum fading, RSI fading. We still have not been able to close above these previous highs from 23 September week and the 21 October week. Looks like a double top with a little bit of a kind of gap up and fall, but on a closing basis, clean double top, looking like this is going to sell some more. Again, pretty much everything across the markets is showing bearishness, but understand that some of these ETFs still have underlying bull trends, and we'll see if they end up finding some support. 21 EMAs all the way down at 189.08. Moving over to breadth here, just starting off with the daily, I wanted to show that we did end up slightly positive on the Friday with the inside candle. Makes sense. We did hit oversold conditions on the 50-day, so we'll see how that ends up playing out. Maybe we get a little bit of consolidation here while markets kind of hover, sideways chop. But looking at the weekly charts, you can see everything continues to look bearish. This is a new relative close low on the 20-day. We haven't closed this low since back here on 10 June, and that was one of those bigger sells. Or back here on 8 April, which was, again, a very big sell. So relative lows on the breadth indicators continuing to go. I think these are going to go to the next level, 28.21. We'll see what happens when we get there. Similarly on 50-day, big breakdown here below the 52.81, below the trend. I think we're going to come down here to that 40 level. Then we'll see what happens after that. Momentum and RSI both very bearish here on the weekly charts. Moving over to 200-day breadth, you can see big down candle there as well. It's right at the 55 EMA. 55 was sitting at 68.68. Current level 68.58. So we did close below it technically just by a little bit. Momentum bearish, RSI bearish. This is still in line with this previous consolidation. We've actually been a little bit lower than this. So we'll see if it ends up holding the higher low. If it pushes down to the 64.74 level and then closes somewhere in there, then we're probably going to see this start to fade off. But you've been in this range for a long time. We're still in this range. Really no changes here on the 200-day breadth. Moving over to the dollar finally slowed down here on the weekly chart with a doji candle completely flat. Interesting, you don't see that very often. Completely zeros across the board for the week. Still finding resistance at 104.41. I think maybe we start to see just a smidgen of a pullback. This has been a massive move. Pull back to the SMA, start to see this being very extended. Retest, hold the higher low, and then rally if it's going to do it. If the dollar continues to show strength, that's going to continue to pressure markets. So far, it hasn't done it so much, but I do think that it will. And this continues to look very, very strong, but it is at a key resistance. We did get a candle of indecision after 4 very powerful weeks in a row. And then we'll see what happens after the FOMC. The rate cut should cause the dollar to sell a little bit. Some of their verbiage could cause it to sell a little bit, but we'll see how it plays out. Interesting zone, finally showing at least a slight hesitation. Moving over to bonds. Bonds continue to sell on the weekly, down 0.64 and TLT 1.41%. At this point, you're expecting a test of 89.16. Again, we should get the rate cut, which should send bonds higher. Markets know that's going to happen. I'm not sure why we're seeing such dramatic selling, but we continue to see it. You get the price action you get, not the price action you think is going to happen. So a little bit more selling makes sense. We'll hit these key levels, and then we'll see if we end up finding some support or not. Otherwise, if it breaks through here, 94.82 is the next one for me, back into this consolidation range that we were in for many, many months. And then TLT, you had a high, slightly higher high here. I'm still expecting a higher low off of this higher low here. Then we'll see what happens from there. Big volume on the week as well, closed on the low of the candle, not great after that jobs data, so we'll see. Everything still looks bearish on both of these. Moving over to the VIX, big up week there, 7.6%, hit the level once again. I think we're going to break through on this iteration. We've tested it 4 times now. We'll see if we can close well above it. We did technically close above it here, and then we threw a huge wick all the way up into the 70s before pulling all the way back into this zone and closing bearish on the week. At this point, it seems like we're going to get a bit of an acceleration here. Last time we saw an acceleration style move like this, we did see consistently higher highs and higher lows for a while. And then you kind of get this slow down downtrend style price action. We'll see if that ends up coming to fruition, but right now, this looks very bullish still for me on the VIX, which means bearishness for equities. Moving over to my accounts, somehow I managed to squeeze out a little bit of a profit, like $100 or so, maybe a little bit less, maybe $60 or so, which either way is pretty good considering how bearish markets are and how bearish they continue to look. In terms of positions, all I have on right now is a IWM position, and this is technically expiring here on the Tuesday, so November the 5th. We'll see if I end up holding that or not. We're right at the money, $2.19, $2 credit, slight profit on the calls. The position is in a slight loser, but I've been collecting credits on here, so probably relatively flat on the position. Either way, protected for about another $1.50 or so, $1.60. That is for 2 days worth of price action. We'll see how that plays out. Not a super great position, but relatively neutral. Only 44 deltas. Being patient here on the IWM. If that structure breaks down like we talked about, then obviously I'll take this position off. Everything looks pretty terrible, and I'm playing very, very cautious into the next week. You can see IB rank all the way up in 48, relatively high. So see how it plays. Right now, markets look weak. Let me know down in the comments section what you think of the market concentration and the potential returns over the medium to long term. Is it going to be a lost decade? What are you doing to try to avoid this potential outcome? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.